Yo, what's up guys? It's your boy Miguel. Welcome back to another video and welcome to this free training module. In this video, I'm going to be walking you guys through exactly step by step on the 0% funding formula. This is the same strategy that I use to get over $250,000 in 0% interest business credit funding to invest in different businesses, crypto, short-term rentals, Airbnb, and now fix and flips. This is the same strategy I've used to help my family and friends and some new students also get over hundreds of thousands of dollars in funding to also invest in real estate. So if you're looking to get into real estate or scale your portfolio, this is it. And make sure to stick to the very end because I'm going to be dropping huge value bombs from start to finish, walking you through step by step, no BS, no fluff, and just dropping free game. So definitely stick to the very end. So if you're watching this video, you're probably going to fit in one of two categories. Like I mentioned earlier, you're either a newbie real estate investor wanting to get into the market or a seasoned real estate investor looking to scale their portfolio. Regardless of where you're at, let's start with the first person. Let's say you're a newbie real estate investor and you're trying to poke your head into the market, then the main thing you're probably facing is, look, you got your comfortable job, you got your W-2, whatever, and you're saving money to buy your first real estate investment. But the biggest problem is right now you still need a place to live. You're paying off of somebody else's rent, paying off their mortgage and getting them equity, all while they're probably going to be raising the rent on you as well. So as you're filling someone else's pockets, you're not going to be able to have as much money to save towards the home that you want to buy. So if you're a newbie real estate investor, you probably don't have, 25, 50, 100, whatever amount in funding to just blow off right off the bat to start getting into these deals. So come check this out here with me real quick. I'm about to walk you through the biggest pain point for newbie investors is just not having the capital. They don't want to keep saving. They don't want to keep paying somebody else's rent. And here's a picture of what it looks like for 99% of people looking to get into the market. So this is all legit data. Got off of ChatGPT, so it's legit. But anyways, check this out. So just going to kind of paint the picture for you guys. So let's not say, the actual average rent price in America is just a little over 1.7K for a home, right? If you multiply that by 12 for an average normal rental 1-year lease agreement, you get, I'm really bad at math, so I got to do this off of Google of my laptop since my phone's recording. Or actually, did I not take? Gotcha. Actually, I already took the notes on it, so we're good. But you multiply this by 12, that's $20,000. So 20.4K, just a little over $20,000 that you've spent to fill up somebody else's pockets. And again, you have no equity, no ownership of the home. You don't get any appreciation or depreciation. Now, the average home price in America, so this is the average rent. And then the average home price is going to come out to $440,300. So 3K for the home. And then the cost for a down payment, if you're using an FHA, let's say we're using 3.5% down, would be $15,410 times 3.5% FHA. That only comes out to 15,000. What is it? $410. Boom. So you just spent literally a $5K difference. You spent $5K more paying off somebody else's mortgage than versus you actually getting to keep the home for yourself. That's a big difference. You're already spending more money here than you would, and you don't get to own anything. So that's BS. So the thing that stops people from home ownership is not having the liquid capital to put down for the down payment. Average American salary, it's, put it right here. We've got, what is it? It's about 60K. It's the average American salary. A down payment would literally be 26% of this for the down payment. Now, I don't know about you guys. Most people, they can't just fork over 25% of their income to put into something. So they're stuck. That leaves them back to here. That makes them feel stuck that they have to keep renting. And the whole time while they're renting, that's money they could have saved to put down for this down payment. So it's kind of a very vicious cycle. Now, let's get into this. So the biggest solution, instead of wasting that time, you're literally wasting money and losing out on all the financial benefits of it. The solution is 0% business credit funding. With a 0% funding formula, you're still able to get approved for 15, 25, 40, 50K plus cards per card at 0% interest and turn into cash by liquidating it to use as the down payment on homes rather than wasting time saving and losing money to rent. So later in this video, I'm going to walk you through that exact formula, but I just kind of want to paint the picture for the type of issues a lot of these new real estate investors are facing. Now, we know what the issues are as a newbie investor. Let's talk about the issues you might be facing if you're a seasoned real estate investor. So if you're doing stuff like fix and flips, buy and hold, short-term rentals, odds are, a lot of people see this all the time. You're asset rich, but you're cash broke. So most likely your biggest problem is lack of working capital. Either all your money is tied up in a current deal and you have properties right now that are a ridiculous offer that your wholesaler is selling you, but you just don't have the funds to buy it now. And it needs to be bought now because it's a deal. And if you don't buy it now, someone else will. So now you're stuck, just kind of shit out of luck. You don't have any more funding to get into it. You've already put it into other deals. You're waiting for it to sell or cash flow, whatever it might be, or waiting for it to refinance, who knows. But odds are what you've already used into the properties are all tapped out, or you've already used all your savings. The money you made from your previous deal is probably funding the next deal. So it feels like you're kind of in this hamster wheel, right? Now, the other option is relying on high interest loans like hard money, which is totally fine. Again, you're losing a lot of money on the table though, because they're taking 10, 12, 15%, plus the points are on the hard money as well. So by learning the 0% funding formula, you have more streams of working capital versus just relying on, the things that are all tapped out, like savings, or the deals that you already had, or relying on high interest loans. So let's give an example. Let's say you're a fix and flipper, right? And you find an off-market deal at, let's say, 100K. Pretty cool deal. Perfect. And it's heavily discounted, so the seller is extremely motivated to give it off, and you need to buy it, ASAP. The average interest rate for a hard money loan is anywhere between 10. So this is the price. Loan average for hard money. This is going to come between 10 to 18%. With a 2 to 6 points on top of the interest. So right off the gate, that's already a lot of money right there. So let's play the best case scenario on this. So with a 10% interest, we're going to take this 10% interest with a two points. Let's see, on a 100K property for 1 year, you're going to be paying $12K just to borrow this 100K. So right now, 12K on top of that, boom, 112K. Cool. So you are literally paying $12,000 every time you need to borrow that 100K. And if you're doing a lot of deals, that's going to add up really quickly. Even if you do one deal, 12K is still a lot of money. So you're not just stuck having to use it if you know the other options out there. So a big thing people might try is some people may even try using their personal credit cards to fund some of the deal, which is a huge no-no. This is a huge mistake. Don't do it. I've talked to plenty of real estate investors who have done this, and they're using hard money, other types of loans, and then they started using their personal credit. The big issue with this is, you max out your cards, your utilization is through the roof, now your score is down. Let's say there's another, unexpected cost and you're all tapped out of your money, your savings, your credit, everything. No one is going to lend to you because your score is super low. And if they do, it's going to be like a loan shark, literally going to be asking you for 60% paid every week until it's paid off. So you don't want to go through that. The cool thing with business credit cards is you're allowed to max them out. They're at 0%. It doesn't affect your utilization or hurt your score, and you can keep applying for more. So that is the solution, 0% funding formula. And I'm going to walk you through the proven method on how to access over 100K as 0% interest business to continue scaling your real estate portfolio. Again, if you're just starting, just at least starting the portfolio. I'm going to build you a custom game plan to fit your funding goals. So let's go into talking about the blueprint, the course, how the coaching program's all broken up, and let's get into it. All right, guys, let's talk about the blueprint. This is the 0% funding formula, and I'm going to walk you guys through the exact banking requirements of what the banks are actually looking for you to actually be able to get approved. And the beauty of this strategy is the whole name of the game is we got to present the perfect credit resume so that we could get approved for what's called no doc check approvals. And I'll walk you guys through in a little bit. It'll make a little bit more sense after I kind of go through the whole process with you guys. But that's the name of the game, 0% funding formula. Let's get into it. Get ready to take some notes. So if you've ever tried to apply for business credit funding, it's not that simple. You really need to know what the underwriting team is looking for to maximize your fundability. So something that will actually help you guys kind of better understand this is, picture yourself as the bank underwriting team, right? So put yourself in their shoes. When I'm going to reach out to, Bank A, let's just call it Chase Bank. When I'm reaching out to Chase Bank and asking for business credit funding, especially if I'm a newbie, the two things they're going to ask themselves is this. Number one, do we trust Miggle? And number two, does his business look attractive enough for us to actually want to invest and fund it? Do we think we're going to get our money back if we give them the funding? And this all goes into the bank underwriting requirements. Each bank's a little different, so you need to know how to play the game. So just starting off, right? Am I a trustworthy borrower? Now, what they're going to be looking at is two things, your credit score and your credit profile. So I'll break this down into credit score plus profile. So starting off with the score, banks, a lot of people get this wrong. The credit score actually doesn't mean that much. All it does is get your foot in the door with the banks to at least consider you, and that is it. So ideally what they're looking for is at least a 700 to get decent credit limits. But at the same time, you could have like an 800 plus credit score and still get denied or only walk away from the bank with 2K, 3K, 5K, 10K type of cards, which ideally isn't the best thing to have, right? And the next thing too is, let me keep talking about the score. So with a credit score, you know, at least have a 700 and up, but a credit score isn't enough to get you the highest credit limits. And when it comes to the credit profile itself, you know, the banks, they're going to ask themselves, you know, how many accounts does Miguel have? What type of accounts does Miguel have? What are the credit limits on those accounts? Does he have any negative accounts? So they're basically going to take your credit profile and just tear it to shreds, honestly, and just try to poke at it and see if there's anything that's going to falter. And when it comes to the credit profile, it's very mandatory that we know specifically what that specific bank is looking for on the profile. So typically banks, they want to see you have, you know, at least 3 personal credit cards with, you know, average 10K per credit limit. That way you have what's called optimized comparable credit. If a bank sees you only have 1 credit card with a 5K credit limit, the hell, Chase Bank is not going to give you 50K on a single card because your profile isn't thick enough. So that's just one of the things. They don't want to see any negatives. They don't want to see too many inquiries, all that stuff. Typically, you don't want to have more than 2 within the last 6 months. If you do, then you can get them wiped off. But that's for something else. But that's the big thing. Building up that trust, having an optimized credit score, and an optimized credit profile. If you get to optimize the profile, the score is going to increase with it. Now, here's the other big thing, is fundability. This is probably one of the most important things with getting business credit funding. So when it comes to fundability, the 2 things that banks are mostly going to be focusing on with this is, you know, how is this person applying and how are they filling out the application? So when it comes to how people are applying, most people, when they're just applying, they simply just fill out an application online. They don't really know what the underwriting is looking for. And what happens is if you're just filling out an application online, you don't know what you're doing, your application is just kind of going through an algorithm if you're just simply applying online. And what happens is people get denied, they get low limits. At the end of the day, that sucks because, you know, with banks that have multiple 0% business credit cards, it's really important to make sure your applications go well because your initial applications, what you get on the first card is going to influence what you get on the second card. So let's say with Chase Bank, let's say your first card, you only get approved for 5K, and then shortly after you try applying for their second card. What do you think the next card is going to be? Probably around 5 to 10K, most likely not going to be 50, 60, 75K type of cards, right? So it's really important that we get the optimized credit limits from the beginning. So again, fundability, how are you applying? How you apply, and then how you fill out application. So going into this, how you're applying, you know, you don't want to just simply fill out an application online if you don't know what you're doing. At any point, if you can, you're going to want to apply through what's called a relationship manager. Basically, these are high-level banking executives who have influence on the underwriting process, who's going to help apply for your business's behalf. And they get incentivized to help you get the maximum funding because they actually get paid a commission from the banks based off of how much they get you approved. Now, the only thing is if you're going to apply through a relationship manager, you need to know underwriting requirements, and you need somebody to be able to connect you. So, you know, your network is your net worth, you know. Now, the other big thing is how are you filling out the application? So most banks, how they work is they're typically willing to lend out 10 to 20% of projected business revenue and projected annual income. The beauty with these numbers is this is an estimate on how much you think you're going to make, you know, given that you get the funding. So, you know, recommend to be optimistic with these numbers, but at the same time, you don't want to be completely out of the ballpark, overstating things and just things to be completely untrue, just because if you do, then the banks are going to red flag your account. They're going to do what's called a doc check. They're going to ask for bank statements, tax documents, all this information, and make you jump through more hoops, go through more requirements. And if your information doesn't line up with that application exactly, the bank, they're not going to want to work with you. You ruined your relationship with them before it even started, and now, I'm sorry, you're fucked. Now, the better way to do it is with the 0% funding formula. We have a database system that literally goes through exactly, hey, here are all the national banks we're going to apply to. Here are all the banks specific to your state we're going to apply to. So we already built out the credit roadmap journey and then walk you through it. We already know where we're going to apply, what we can expect to get. We let you know the data points and the underwriting requirements, what they're looking for, kind of like scripts of how to present yourself, make a good first impression and all that. And that's going to help us make us more fundable. And again, I said the whole, basis of this formula is we want to build out the perfect credit resume, because when we build out the perfect credit resume, the banks don't have any reason to scrutinize our application. There's less requirements, and we're able to get approved with what's called a no doc check approval. Basically, that means they're not going to ask for bank statements. They're not going to ask for tax documents. And what that means for you is, you're still able to get funded even if the business is brand new, even if your personal income's low, and you don't even have to have business revenue established because they don't check any of that. It's a no doc check. For me, when I first started my Airbnb business last year, at the time I was broke. I just moved from New York back to my parents' house, doing Airbnb back in Bakersfield. And at the time I was broke. The LLC was barely a month and a half old. And obviously with it being new, I didn't have any business revenue. But I was still able to get approved for a 25 and 50K card in a matter of weeks of each other. And that's the type of results you could expect when you understand when it comes to the funding game and the banking system. Understand that it is a game, and as long as you know what the rules are to that game, which rules matter most to the banks, then you're going to be able to come out on top every time. Oh yeah, guys, so that is the 0% funding formula. So just to kind of recap, if you want to get 100, 200, 300K in 0% interest business credit funding to continue investing into real estate and growing your portfolio, the big thing to hear to be able to get those high limit 0% business credit cards. So while other people are getting approved for 3K, 5K, 10K type of credit limits, we're out here getting approved for 25, 30, 40, 50, 60, 75K type of cards. And as long as the basis is, come off as a trustworthy borrower, look fundable, know what the bank underwriting requirements are. So that means having a good score, optimized credit profile, applying through relationship managers when possible, knowing what the underwriting team is looking for, having the right connections, and knowing how to fill out the applications with the right data points, and how to present yourself, and have those right scripts of talking points of how to come off more professional and fundable, then I promise you, you will be able to get funded. But heck yeah, I hope you guys got a lot of value from this. This is going on the YouTube. And appreciate you guys sticking away all the way through. Again, hope you guys got a lot of value. If you guys got any questions, hit me up in the DMs, comments, whatever. And I'm hoping to be able to see you guys win with this. Hopefully, if you guys are looking for coaching, I do offer the Family Legacy University coaching program, where I do teach people this 0% funding formula. And it's a community of awesome real estate investors looking to create that generational wealth. And that's about it, guys. Peace out. Much love. Stay beautiful. See you in the next one.